it'll give you your history, okay? And what I'm going to just copy that because I don't trust myself to remember it. Why not get it on this page? And you got to type in :IND. Okay, and then what that does is it compares the two. Okay, so we have the orange is the US 10-year bond yield, and then you have the green, which is the German, or which is closely associated to the fiber, Euro USD. The green is seen here. Now, here's what I want you to look at. If you look at this chart, you'll notice that the orange, okay, has a low here, goes higher, then goes lower again, but look at the low is higher than it is here. You do not see that happening with the German, okay? The German went lower, okay? And you probably be seeing it easier if I went to a 3-year. Yeah. We went lower in the German and higher in the US. So comparing the lows, respectively, there is a accumulation going on, and it's seen with the US bond yield. Okay, so now if we go back to Google once again, and we do a 10-year UK bond yield chart, you're going to be looking for, again, the Bloomberg, and it'll say government bond 10-year note generic. The GUK GU10IND. Okay, I'm just going to copy it from here. And then actually open the chart up so you can see it. So now it's in my, there's no real clear discernible. But it's amazing how when you're trading or you're looking for setups, you forget this phenomenon. The concept is basically how the market moves from trading ranges or consolidations to swings or trends. And they move immediately right back into a consolidation. And then after consolidation, people get sick and tired of the marketplace. They don't worry about getting in, or they chased the previous move, and that inside that little consolidation are these rectangles or squares. If you look at on this chart as an example, that's where dealers and market makers establish their positions. Okay, so we do not chase the marketplace. We do not chase price rallies. We do not chase price declines. We work within these consolidations. Smart money accumulates during consolidations or when the market's not attractive. Okay, and we're going to build on this model as we go through the series, but it's very important for you to start looking at the charts with this premise in mind. Are we consolidating? Because that's the next, the precursor is the consolidation. Then the next thing to expect would be that a release, that dynamic thrust up or down in price action where everybody gets really excited. You see everybody tweeting about it. You see every analyst saying they had it right, for the last 6 months. That's really what you're looking for. You want to be in there before everyone else is talking about it. Okay. All right, we're going to be talking about the concept of power of three. Okay, and what this is basically a understanding of how the market, it'll give you your history. Okay, and